Yeah, so this was the biggest question this year. If we go back to Liberation Day, when very high tariff rates were proposed and then brought back down, the market has been trying to figure out how much gets passed through. What ultimately is the impact on inflation? So our economics team came up with estimates, of course, our forecasts. And what we've seen is they've generally followed, but just a bit slower. So what we've seen pass through lower than we would expect. Now, there's a few reasons for that. One is import front loading, buying goods before the tariffs were in place. The second is rerouting through lower tariff countries, would be the second reason for that. And then the third is there has been some profit margin erosion. For example, the auto companies have not passed through the impact of tariffs, so profits have gone down. So the combination of that would say less inflation, but also there's a risk that some of that inflation just gets pushed into 2026. So when we think about the growth side, tariffs have not been as negative of an impact on growth than we would expect this year, but that means they could be a bit of a depressant in growth, all else equal, in 2026.
Yeah.
Now, our forecasts for growth this year and next are quite comparable, about 1.5% for this year and next year, with inflation ending the year at around 3.1, and that's core PCE, but next year falling down to 2.5%. What's interesting about the 2.5 is that has the impact of tariffs. If we strip that out, we will be a bit closer to the 2% rate. So overall, less severe than what was envisioned, but the risk that they get pushed into 26 a bit, which would say growth would be slower. Now, we think about the time frame. The time frame for the impact from the tariffs, and I think we're living it today, because we have slower growth when we think about some consumption rates as well than we would have had otherwise. But we think the next 2 quarters or so is where the impact from tariffs will be the greatest. Once we get past that, we would expect to see growth pick up, particularly in the second half of 2026. I know it's a little bit further out, but that's driven by fiscal policy, deregulation, easier monetary policy, and so forth. So we do look at the risks still in the near term of slower growth, but then a little bit further out is the risk going to be for a pickup in economic growth rates.